All right. Good morning, good afternoon, depending on where you're tuning in from, and welcome to this week's mobile coaching stream. My name is Patrick France, senior instructor here at VectorVest. Glad to be with you all. If you guys can hear me out there, let me know in the comments or in the chat. Type in VV Nation. Also, if you haven't already, just tuning in, make sure smash that like button. All that helps us out with the YouTube algorithms and doesn't cost you a thing. So if you guys enjoy these sessions, want to keep seeing them, make sure, as always, smash that like button there. Perfect. Looks like you guys are starting to be able to hear me. So we should be live both on Facebook and on YouTube. While we're waiting for confirmation, making sure everything's coming through loud and clear. Good morning, Couch Potato. Hopefully you're doing well. Jazz, hopefully you're doing well as well. Mark, good morning. Jay, Drew, Badger, glad to have you all here. And as we can see, as always, Jay's in the chat. Welcome, Jay. Didn't see you yesterday, I don't think, so we missed you yesterday, but glad to have you here today. Good morning, Lou. And then over on our Facebook, let me make sure it is working there. If you guys can hear me over on our Facebook, type in VV Nation into the chat. We should be live there. I can see the comments, so everything looks like it's working a lot better here this week. Perfect. So as always, if you're brand new to our weekly streams, what we do is we go over the VectorVest Stock Advisory app, which is one of the most comprehensive trading apps available to you to help manage your portfolio and make it easier, faster, and better than anywhere else out there. And if you're new, the typical flow that we go over just to get everybody familiar with it is we'll start to take a look at what's going on in the market here today. Then we'll dive in to take a look at our topic of discussion. And then as always, we'll finish off with the fan favorite at the very end, where we'll analyze any stock that you want to take a look at in less than 10 seconds. So if you guys want to see your own stocks get analyzed, make sure to stick around to the end and we'll get to those as well. All right, So what a crazy day it is. Markets are up nicely. And as we can see right now, we are one tick into the green. Therefore, the market is mildly bullish, and VectorVest advocates caution still when buying stocks at this time. Still a little early. We've had, some pretty significant down markets here over the last few months. So we still want to use caution right now, even though the markets have been looking a little stronger. We still advocate using caution currently. So as always though, if you ever want an update on what's going on in the market here today and how to prepare yourself for the next trading day, make sure as always to tune into the daily color guard report every single night where we recap everything that you need to be aware of to help make smarter investing decisions for yourself. Good morning, Rodney. Hopefully you're doing well. Glad to have you here. All right, so as we scroll down, taking a look at the color guard. Now the color guard is where that gauge that we just looked at gets its colors from. So as we can see, that green light is coming from the price column, which shows that the price of the VectorVest composite is higher day over day and week over week. Now the VectorVest composite is an arithmetic indexed average of about 9,200 stocks out there in the US market. So this gives us a better representation of what's actually going on in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100, but looking at 9,200 stocks out there. What stocks are we loving today and yesterday? Oh man, too many to go over in just a quick moment there, Jay. But we'll take a look at some, see what we have here today. Good morning, Patrick. Like the name, welcome. So I see a lot of new people just now tuning in. As always, welcome everybody to our weekly mobile coaching streams, where we'll cover how to use the VectorVest Stock Advisory app to make the most out of it to help become better and smarter investors out there. So as always, though, if you're new, make sure smash that like button. Help us out with the YouTube algorithm so that way we can continue to grow this awesome community that we built here. So if you haven't already, go ahead, do so right now. All right, so getting back into the color guard now, as always, taking a look at the RT, or the relative timing. The relative timing is looking at the short-term price trend in the market, and it's cast on a scale of 0 to 2. So above 1 would indicate that the short-term trend in the market is up. Below 1 would indicate the short-term trend in the market is down. So with 0.83 for the RT currently, we do see that it is higher day over day and week over week, but still remains below 1. So therefore, we still are in a short-term downtrend. Hey, Donald, tuning in from Facebook. How are you? Hopefully you're doing well here today, and seeing Jay coming in as well over on our Facebook page as well. So glad to have you guys here. Hopefully you guys are having a good morning so far. All right, so after the RT, taking a look at the buy to sell ratio. The buy to sell ratio is looking at the overall health of the market. And it's looking at the number of buy rated stocks that we have compared to the number of sell rated stocks that we have. If there's more buys than sells, the buy to sell ratio would be above 1, which would indicate overall market strength. And if there's more sells than buys, as there is now, the buy to sell ratio is going to be below 1, as we can see at 0.23, which indicates overall market weakness still. But when looking at the trend of it, because as we always talk about, let the trend be your friend. We're trend followers here at VectorVest. And looking at the trend, we are higher day over day and week over week. And finally getting back above that level of 0.2, which historically has indicated oversold conditions. So we've been in oversold conditions in the market. Now starting to see some positive signs coming back out of that territory there. And then the trends of these three indicators are comprised to come up with our MTI, or the market timing indicator. Now this is going to be cast on a scale of 0 to 2 once again. And above 1 would indicate that the underlying trend in the market is up. Below 1, the underlying trend in the market is down. So 0.64, that does tell us that the underlying trend in the market is down currently. But once again, let the trend be your friend. We have a higher day over day and week over week movement here with the MTI. So the trend is definitely starting to get a little bit more positive here, especially compared to what we've seen over the last few months. So after the MTI, we then get the trend column, which shows two parts of the trend each and every day. Now the first part is referring to the primary wave, which is just simply the short-term or weekly trend of the market. As we can see, it is up since the price of VectorVest composite is higher than it was compared to 5 trading days earlier. The second part of the trend is looking at the underlying trend, or the MTI, and since the MTI is below 1, the underlying trend of the market will still remain down. Now, after the trend column, we then get the calls column, and the calls column stands for our confirmed calls. Our confirmed calls are our most conservative timing system here at VectorVest, and they're our last signal we get to get into the market and our last signal we get to get out. So as we can see, we still remain in that confirmed down situation as of today. And now, as always, if ever you're getting ready to buy a stock, or if you're wanting to jump back into the market, or if you're wanting to short a stock even, we always want to take a look at the advanced declines, which indicates the number of stocks moving higher for the day compared to the number of stocks moving lower for the day. And when we look at this, we look for a 2-to-1 bias. So right now, we have about 73% of stocks moving higher and about 14% of stocks moving lower, clearly well over that 2-to-1 bias. And this tells us that if we did get into a stock right now, the momentum or the wind is to our sails. So we have overall positive signs that if we got into this, the probability is that the stock is making money. And so you're just simply putting the probability in your favor when looking at the advanced declines and seeing it above that 2-to-1 ratio that we look for. All right, so as always, taking a look before we jump into our topic of discussion, taking a look at the major indices. The Dow is up almost 1.5%, Nasdaq's up just shy of 2%, S&P 500 is up 1.6%, and then the VectorVest composite up 1.5%. So all the major indices right out of the gate this morning exploding higher here, taking a little bit of a breather as we test these new ranges here, moving sideways a little bit over the last about 20-30 minutes or so, but we'll definitely make sure we pay attention to this and see if they can continue to move higher throughout the rest of the session here. All right, so with that, let's go ahead and jump into today's topic. So as we always talk about, under the stock pick ideas, there's a lot of different options depending on your own personal preference. And you can find, momentum stocks, hot stocks. So if you're a short-term trader, those are places you could look at. And if you're more long-term oriented, if you're looking for more of that dividend aspect, you have the retirement stocks. But then we always talk about the hot industries here at the bottom, which is showing the hottest industries at any given time. So this will change day to day and throughout the day sometimes if there's a lot of volatility, but this will help us identify what are the best performing industries at any given time. And, there's an old methodology of, buying the best stocks in the best industries and, utilizing that as your source for finding stocks, and then putting on your stops just like you normally would with any other position. But that way you're getting the best of the best and not, having to either just buy the average and just perform averagely, or, wanting to know, hey, is this really the best one in this industry? It's in that hot industry, but maybe it's not the best performer and maybe there's better options out there. So VectorVest will help you identify those stocks quickly and easily by bringing the best to the top and the worst to the bottom. So that way you have to spend less time managing your portfolio and finding the right stocks at any given time. So no surprise here. We see petroleum has been one of the top performing industries for quite some time. And today, let's start off taking a look at some of the stocks in that and see what the charts are showing us. So we'll start off taking a look at the hottest there, the petroleum US royalty. And we can see some stocks that have been some of the top VST stocks here, such as SJT. And looking at the overall VST ratings, all of these are positive. All of them are well above 1, with SJT even coming in at 1.64. So if we tap on a stock, we can get the analysis here. And there's 4 indicators at the bottom that you can always use to quickly analyze any stock out there. So all of them are going to be cast on a scale of 0 to 2. And all you have to remember as an end user is above 1 is good and below 1 is bad. So the first one we look at is the RV, or relative value, which is looking at the long-term potential of the stock over the next 1 to 3 years. And I see Quint coming in as a new subscriber. Welcome to VV Nation, Quint. Glad to have you here today. And Joe coming in as a new subscriber. Welcome to VV Nation, Joe. So the long-term potential is what the RV shows. And as we can see at 1.74, that indicates it has good long-term potential here. And once again, a new member coming in with Scott. Scott, welcome to the VV Nation. After that, the next indicator we look at is the RS, or relative safety. The relative safety is looking at the consistency and predictability of the financial performance of the company. But the easier way to think about it is it's simply an indicator of risk. So if the RS is above 1, that would indicate less risk associated with it. Above 1 means more, below 1 means more risk associated with it. So this one at 0.99 tells us there's about average risk out there compared to, the average stock out there. But then we look at the RT, or the relative timing. Now, the relative timing is that short-term price trend, but this time for the individual equity. At 1.97, that's about as close to 2 as you're going to see. Occasionally, you will see that 2, but it's pretty close to the highest level it can possibly be, telling us it's a really strong short-term uptrend. So the combination of these three comes up with our VST. So overall, the stock is definitely favorable. Now, let's go ahead, jump into the graph here and take a little bit of a look. So right now, we have the price shown in candlesticks. We have a 30-day weighted moving average. We have RT at the bottom. Let's go ahead to the graph settings below there and change it from the lower graph to the MACD. We've been talking about MACD a lot here, so we'll stick with that here today. We'll have the MACD on the bottom, and then we'll keep the 30-day weighted moving average. That's fine. And then we'll zoom out to a 6-month time frame. And one of the key things that we're noticing here with these is if we look, what is price doing? So actually, let's maximize it. That way everybody out there can see it a little bit better. How long do you think stock can stay overbought? Example, petroleum. Maria, that's anybody's guess. Nobody can predict or, say exactly how long a stock is going to stay in overbought territory. But at the same time, you got to just let the trend be your friend. And I see Zahn coming in, Darnell coming in as new subscribers. Welcome to the VV Nation, guys. Glad to have you all here. Hopefully you guys are having a good day so far. But looking at it, we look at the price action. Price here, and then just hitting a new high as of today. But then you look at the MACD here at the bottom, and you can see we're actually hitting a lower high on MACD. While MACD is still continuing to climb, so therefore you still have potential for it to take out that previous high. We are noticing, a decline in MACD, which indicates not only the longer term trend, but also the shorter term trend is starting to dissipate to the upside. And therefore, we want to, be careful with this. So I know a lot of people are in these oil stocks because recently, over the last year or so, that's been about the only, or not the last year, but in the last 6 months or so, that's really been about the only bright aspect of the markets. So I know a lot of people are in them. A lot of people are making good money with them. But when you start noticing signs that that longer term momentum and that upward momentum is dissipating, that's the time you need to pay closer attention to them and consider tightening up your stops or taking some defensive action or defensive measures to make sure that you're locking in or maximizing your profits here with that. Marianne coming in. I'm a new member as well. Welcome, Mary. Glad to have you here. Seeing some of these functions for the first time. Sure, Mary. I'll go a little slower with it. But yeah, looking at it here, you do have price steadily moving higher and MACD, which is a technical indicator, moving lower. So therefore, creating that bearish divergence and suggesting that downside risk may outweigh upside potential. Now, I say may because we're not quite there to confirm that lower high yet. If SJT, for example, continues to move higher, MACD could also continue to move higher along with that price action and then potentially take out that previous high we had right around the middle of April. But at the same time, if we start rolling over, if we start pulling back, which you look at yesterday's candle, we formed a doji indicating indecision. Today, we moved higher, but now starting to pull back as well. So we're seeing, just based off the candlestick action, some weakness coming in here. And that's definitely, when you add that with the fact, or when you add that with what we're seeing with the MACD, that definitely gives us some worry signs and gives us some early signs actually on, hey, now is a good time to, pay closer attention to it and consider, having some defensive measures in place so that way you can maximize your return on your positions. So if we get out of here, go to the next one, we'll go back a little bit, go to the next one, ECTM. So let's go ahead and analyze this here. So has good long-term potential, but it does have more risk associated with it than the average stock out there. Timing at 2.0 tells us it's in a really strong short-term uptrend. No surprise there. So overall, the stock is favorable. Now, this is more of an aggressive play because the RV is greater than 1 and the RS is below 1. So therefore, if you're not an aggressive play or trader, make sure to, use a little bit more caution. So if we jump into ECTM, let's take a look. Price hitting a slightly lower high currently, but let's look at the MACD. MACD hitting a drastically lower high over that same time frame. So we got close to breaking down below that level of 0 on the MACD and the signal line, which would indicate the longer term trend. The MACD line is greater than the signal line currently. So therefore that does show, short-term momentum starting to pick back up to the upside, but the longer-term momentum is still waning here, giving us, that bearish divergence once again. Now, if we go through a lot of these stocks, BSM, the next one, same situation. MACD is steadily moving lower as price has been about the same. So indicating it's cooling off and that the upward pressure that we've seen in the oil stock so far is starting to dissipate. And this is something you need to be aware of, especially once again, if you're trading these oil stocks off this momentum that we've seen, since the beginning of the year so far. Moving on to the next one, PVL. This one is hitting a new high. MACD is confirming it, so maybe not too worried about it currently. But if the overall industry is starting to show weakness or showing that bearish divergence, then as we all know, all boats rise with the tide and all boats fall with the tide. So therefore, even if it's still breaking that overall trend from the industry it's in, it can't do that forever and it can't do that for long before the overall trend of the industry starts pulling back on that one as well, or causing it to pull back as well. Hey there, Nectarios. Hopefully you're doing well here today. All right. Let's go to the next. CRT. This one also going against the overall trend. This one, right now, we are retesting that high on the MACD since about the 19th of April. While price is still hitting a higher high, MACD is not hitting that higher high. So therefore, it tells us, be careful with this one because we still see that bearish divergence. And even if you go back on a 3-month basis to here, it's even clearer at that point. Price is hitting a new high now. MACD is hitting a lower high, therefore not confirming that new high in price. And so, with knowing how popular oil has been as a play this year, this is why I wanted to talk about this here today, so that way you guys can not only identify, some potential weakness on some of your current holdings now to make sure that, you're locking your profits in or being a little bit more defensive with them, but that going forward, you also start to be able to identify these signs earlier on your other holdings. So that way you can maximize your profit, not just on these trades, but on trades going forward. Our whole goal here today, or our whole goal here with these coaching streams is to help you guys become better traders, better investors. And therefore, knowing these little tips and tricks can greatly improve your performance over the course of, 1 year, 5 years, 10 years down the road even. Doing well. Thank you for asking, Nectarios. Glad to have you here once again. Glad to see you here today. All right. Okay, making sure I got caught up on chat there. I own SJT. Well, there you go. So this is definitely helping at least one person in the chat here today. If you own a oil stock in your portfolio right now, type a 1 into chat. If you don't own any oil stocks in your portfolio, type a 2 into chat right now. I want to see what the general consensus is so far here today. Let's see, waiting for the responses. 1, a lot of ones showing up all of a sudden. Yep. So I see the vast majority of people in here own a lot of oil stocks. A couple people don't, but a lot of people do. So what we're talking about here today is definitely going to benefit the vast majority of people in here. And then the people that don't own any oil stocks, this will at least help you start to identify what to look for. So that way you can make sure you're maximizing your profits in other holdings outside of the oil stocks. I'm seeing a little bit more indecision, a little bit more of 1s and 2s over on our Facebook page, but a lot of 1s coming in on the YouTube page. All right, so let's go ahead and take a look at the next one. BPT, another one. MACD steadily moving lower on a longer term basis. Looking at the price action, steadily moving higher. So as it's moving higher, that upward pressure and that upward momentum is starting to wane or dissipate and starting to run out of steam, if you will. Now, for let's see, for Marianne, I'll go over this because I do understand there's a lot of new people that tune in every week. So what I mean by a bearish divergence, or looking at it here, is when prices hitting these higher highs, that's a good thing. But when you see an indicator like MACD, and more specifically the longer term look at MACD, what I mean by that is, you have these MACD lines, or the two lines here that make up the MACD indicator, and then you have the longer scale over on the right. So as long as those lines are above that level of 0, that indicates a longer term uptrend. Now, if the MACD line and the signal line both go below 0, that indicates a longer term downtrend starting to show itself, if you will. On a shorter term basis, when looking at MACD though, if the MACD line crosses above the signal line, which you can see the difference between shown as that histogram, that indicates short-term momentum to the upside. Now, if the MACD goes below that signal line, that indicates short-term momentum to the downside. So the MACD is a great indicator because it gives you views on both a longer term and a shorter term perspective, all summarized into one, which is why we've started really showcasing it a little bit more here as of late. I love a good stock rising in price while paying a dividend with good fundamentals. Who doesn't? Not a reflection on oil not holding any swings right now. Well, there you go. So, and that's the thing, is we've talked about this many times in the past. The charts don't lie. And while, oil continues to hold steady, we don't know exactly what the cause will be, or when the top will be, or what the cause will be to make it start reversing, or when that top will be. But when you start seeing these signs early on, that definitely should catch your attention, so that way you can pay closer attention to them. And then once, because by the time you hear it on TV and them talking about, oh, oil's dropping, oil's taking a big dive, by that point, it's usually too late. Whereas if you looked at the charts and followed your charts, they're going to give you an earlier signal that is starting to occur. So that way you can get out early before, the main crowd starts to exit, and then the stocks start plummeting, and then you're trying to just, get it filled as fast as you can, end up taking a bigger loss than what you would like, or not locking in as much of the profit as you typically prefer to. So that's why we want to cover this here today, and mainly go over some of the hotter industries right now, because this is where the majority of the money is in the market. All right, so we've gone over that. I think everybody gets the idea on the petroleum U.S. royalty. Let's take a look at the international integrated. So CVE, looking at the fundamentals, good long-term potential, less risk associated with this stock. It's in a really strong short-term uptrend. So overall, the stock is definitely favorable. Now, if we go take a look at the graph is showing a little bit different of a picture than what we were seeing before. MACD is still climbing, so this one looks pretty solid still. If we go EGY, why is it not loading? There we go. Now EGY, on the other hand, MACD steadily moving lower. Price has also been moving lower here over the last month or so. And then from a longer term perspective, you see the MACD line is below that level of 0, indicating a longer term downtrend. It looks like it's trying to fight back. So if we can see, maybe this is one that you missed out on initially, if we can see that MACD and signal line cross above that 0 level, then that would indicate that the longer term uptrend is now starting to form. So if you're more of that buy and hold style investor, or willing to buy and hold for longer rather than just a couple of weeks or so, this could be a good entry into one of the hottest industries out there. Snowflake fell and rallies 7%. We'll take a look at some of the stocks you guys are interested in here in a moment. All right, so COP on a longer term trend looking at it here, price is still moving higher. MACD though, moving slightly lower. Now, if it keeps climbing, obviously we could see that bearish divergence dissipate or get invalidated. But for right now, you do potentially have that bearish divergence setting up. So therefore, if you're in this one, make sure to pay close attention. You probably have some really good gains in it. And I highly recommend, you're looking for more indications on knowing when to take your profits. Go back, watch some of the previous streams that we've done on the 4 tips of knowing when to sell, because those specific tips could definitely help you out as well. That's transport. Oh yeah. So transport is another one. So we've gone over the oil. Let's go back. It's not here today. So we're not seeing the transports. Transports have been in the top. I was hoping we would see that. But the same pattern for anybody that's been taking advantage of the transportation industry as well, the same situation has also been occurring with that. Steven's talking about Boyle. We'll take a look at Boyle as well. Another one. I like seeing that everybody's noticing these divergences and some of the same areas here. So I like seeing that you guys are already on top of things, starting to go through this and noticing some of this, noticing some of these trends as well. It's not just me. Makes me feel a little bit more sane here. All right, so then we got food, sugar, flour, and wheat. This is something that we definitely want to be aware of, especially with what's going on over in Eastern Europe right now. We've seen the impacts that has had on oil markets. Now, the grain markets could be 10 times bigger than what we've seen with the oil spikes. So this is one to definitely be careful of, and could be an interesting market to look at. But let's go take a look at the graphs. Price has been steadily moving higher here. MACD has been steadily moving lower. Now MACD is trying to pick back up right now, but price is still lower, on this most recent pullback. So you had the bearish divergence created here, but then all of a sudden, now you're starting to hit lower highs, lower lows. This 30-day weighted moving average looks like it's been acting as a pretty strong level of support over that most recent run. So if it fails to hold above that 30-day weighted moving average, that could be an early indication that trend is starting to change, and that moving average that was acting as support is now starting to act as a level of resistance. So something to pay close attention to if you're trading these, the commodities especially. Let's go back here. STKL. This is definitely a more speculative one, but really strong momentum. So if you're a momentum trader, could be an interesting stock to keep an eye on. Looking at the MACD isn't really confirming any sort of bearish trend. If anything, definitely shows that some new momentum has started to come into the stock when you had that big jump initially about a couple of weeks ago. Then ADM. So this one, you had a nice steady run, but now starting to head lower. So you're already starting to see some weakness out of this one as well. POST, gap down, trying to recover a little bit, but be careful with that one. INGR, this one not really going against the overall trend. So this one's still in good shape for the time being, but with the overall trend on the on these stocks in the same industry, you definitely want to be paying close attention to some of these right now. Walmart, J&J, we can definitely take a look at those in just a few moments. So with that, I highly recommend put on the MACD, go through your own portfolio of stocks and see if you notice any of these divergences creating or starting to form in some of your own holdings. If you see that, definitely take that as an early warning sign. Doesn't mean you have to close out immediately, because divergences can take a while before they actually take hold. So take advantage of the trend while it's still moving in your favor, but be aware that if there is, a weakness starting to show, be aware of that, so that way you can lock your profit in as quickly as possible rather than getting caught off guard. All right, so with that, let's go ahead. Start to take a look at some of the stocks that you guys have had questions about. Starting off with Boyle, because I've had Boyle come up from a lot of different people. And Boyle is an ETF. So with that being said, an ETF is always going to have its fundamental indicators such as the RV and RS set at 1. And then the main focus with an ETF is going to be the RT, or relative timing. So at 1.95, that tells us it's in a really strong short-term uptrend. If we go tap on the chart though, looking at it here, price hitting 3 consecutive higher highs. Looking at it here, lows a little inconsistent, but now starting to move higher. Looking at the MACD, peak was right there, lower high here, lower high here, indicating, natural gas has been a huge trade this year, but that pressure that's been pushing it higher is really starting to slow down, if you will. Now, who knows why, or who knows what that reason will be that they will give you to justify that, okay, natural gas, is time to come back down. It's the run is over. Everything's going back to normal. Who knows when or what they'll use to justify that, but we can already see that trend starting to emerge here. Now, if you have trend lines, you could draw a trend line on the MACD, connect those high points there, and if you break that trend line, then that invalidates the bearish divergence that we see. But if we don't break that trend line, then that gives you even more confirmation that the divergence is really starting to take hold. All right, ZIM down a little bit here today, but now that we have an actual stock, let's go over the analysis here. So starting off with the RV, the relative value, once again, looking at the long-term potential over the next 1 to 3 years. At 1.87, that indicates this stock has good long-term potential. The next one is the RS, or relative safety. So how much risk is involved with the stock compared to the average stock out there? At 0.93, that indicates a little bit more risk than the average stock out there. Then we look at the RT, or the relative timing. Once again, the short-term price trend of the stock, 1.83 indicates a really strong short-term uptrend. So overall, the stock is favorable. SNOW. All right, we'll take a look at that one. SNOW, this is a speculative play. We know that because the RV and RS are below that level of 1. So this stock has poor long-term potential, has a lot of risk compared to the average stock out there. You're in a really strong decline. Overall, the stock is not favorable. If we go take a look, stock gap down here today. I think you guys were talking about, I think in earnings or something there going on, fundamental related, but it has started climbing back, taking a little bit of an advantage with the overall markets getting a nice boost here today as well. So yeah, be careful with this one. Let's see. What about consumer goods stocks like Walmart? Let's see. WMT. Walmart. Poor long-term potential. Does have a little bit more risk than the average stock out there. It's been in a steady decline. Overall, the stock is not favorable. If we go take a look, let's look at MACD. Let's zoom out a little bit here. So stock was moving sideways, had a little bit of an uptick coming into the highs there, right around that 160 range, right around the middle of April there. No real signs. Well, if you look at the histogram on the MACD, you can see that each little run up on the short-term basis was starting to get weaker and weaker. We zoom in. Let's go right here. We can see that the histogram was slowly declining on each leg up, indicating on a short-term basis, each move that it was making was on less and less momentum behind it. So then you started getting to the top. You notice the doji at the high, which indicates indecision, followed by a red down day the next day. From candlestick analysis, that tells us that the reversal from potential doji that we had the day before is getting confirmation there. That would have been an early warning sign. When he broke down below that 30-day weighted moving average, that would have been another early warning sign. VectorVest started getting from a buy to a hold to a buy, and then to a hold, stayed a hold for a while as it was starting to move lower. Coming into earnings, definitely also giving you even more confirmation that something was going on here before the earnings announcement was even made. Then all of a sudden, stock gap down, continued to move lower. J&J, let's take a look. So J&J, good fundamentals, but that RT at 1.02 is definitely a worry here. Anything between 1 to 1.1 tells us the stock is really just treading water at the time. It doesn't really have a lot of strong momentum to the upside behind it. Going to take a look at the chart. 6 month. Yeah, I mean, price was steadily moving higher. MACD over that time frame, hitting a lower high at its peak here compared to where it was back in November. So yeah, you're starting to see some worrisome signs with MACD on J&J as well. All right, getting back, let's go see some of the other ones. GME, we'll take a look at that one here today. Pulling back a little bit, but this is a speculative play. The short-term trend is now back to up. Overall, the stock isn't favorable currently. Looking at it here, it's definitely seen a lot of volatility, but you had a double bottom right at that 80 level. Most recently, this run-up that we've seen here came back, didn't get to a new low, which, as we always talk about, higher lows tends to lead to higher highs. Well, if this is that previous high here at 200 and you just have a higher low here, things are looking pretty solid for that setup. MACD turning positive, just kind of following the overall trend, not really giving any warning signs one way or the other. So overall, up 14% here today. It was up almost 30% yesterday. I like the way this is moving, especially with earnings coming up and a lot of information about their new releases coming up. We could see a nice run up coming into it. Let's see, MUSA. Murphy Oil, good long-term potential, less risk associated with it. You're in a strong uptrend. Overall, the stock is favorable. Looking at it, price ran up here. MACD still moving lower at that time. Now all of a sudden, price gap down or move down big. So careful with this one. You're still seeing that bearish divergence even with Murphy. Let's see, CNX. CNX, good long-term potential, a little bit more risk associated with it. You're in a strong uptrend, so overall the stock is favorable. Taking a look at the chart. Had a nice run-up. After that big run-up, you saw some volatility kicking in. Stock pulled back. Now starting to make a new run higher here. MACD line is on a longer-term basis, crossing above zero. Need to see that signal line also cross above zero for that longer-term confirmation of an entry there. WMP. Wait. WMP. Did I miss it? WMPN maybe? This one, poor long-term potential, a lot of risk associated with it. You're in a slight decline on a short-term basis. Overall, the stock is not favorable. DRIP, DRIP. So this is the Bear Oil Contra ETF. As we can see, it is down since oil has been moving higher. 0.27 indicates a strong short-term decline. Moving into the graph, a little bit of an opposite view of what we were seeing with the oil stocks. Obviously moving down because oil has been moving up. This one, the MACD has been steadily climbing to the upside here, indicating a bullish divergence and suggesting that upside potential outweighs downside risk rather than that bearish divergence. Now, obviously, you do want to see some sort of confirmation of a turnaround before entry, such as either stock closing above that 20-day or 30-day weighted moving average, or the MACD crossing above the signal line, giving us a short-term bullish indication, or whatever else you use to get your info or get your confirmations there. You do want to see that reversal, but you do see early signs of a bullish divergence. So therefore, one to definitely keep on your radar. EXROF. Of course, got to look at XRO every single week. We got to look at it. So this is more of a speculative play. You have poor long-term potential. You do have a lot of risk with it. Timing is basically flat. You can tell that by the chart, basically just moving sideways. Overall, stock is not favorable right now. DLTR. Dollar Tree. Dollar Tree. Poor long-term potential, but has solid fundamentals, so less risk associated with it. You are in a short-term uptrend currently. Overall, the stock is favorable. Up 18, almost 18.5% here today. CCL. CCL. Good long-term potential, but does have a lot of risk to get to that potential. No surprise being a cruise ship right now. We all know how that's been over the last 2.5 years now. Short-term downtrend. Overall, stock is not favorable right now. DSX. DSX. Good long-term potential, but does have more risk associated with it. You're in a really strong short-term uptrend. Overall, the stock is favorable. Now, this comes from transportation shipping. And one thing I will definitely say, price moving higher here, MACD hitting a lower high or about a double top there with that one. Now, if price can still move higher and MACD takes out that previous high, obviously that would invalidate that bearish divergence, but you definitely want to keep an eye on that. So I see more, you have a support right around 550, resistance at 650, maybe on a longer term basis, but I look for that support around that 550 range. BAC. BAC, good long-term potential, less risk associated with it. However, you are in a slight downtrend on the short-term basis. Overall, it's a good stock. Just need to see that timing pick back up. Macy's. So Macy's, good long-term potential, but does have more risk associated with it. You're in a steady short-term uptrend. Overall, stock is favorable, up almost 17% here today. Not bad. Let me make sure. Wheat Inc. So this one, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, it is not favorable. Yes, it is up 10%, but let's go look at the 1 day. There, let's go switch the graph settings at the bottom. Change the lower graph here. Put on volume. Go back. No trading volume here. So therefore, yeah, definitely want to be careful on that one. SPYG. SPYG. So S&P 500 growth. RV, RS always going to be pegged at 1. Therefore, we're looking at the RT 83 or 0.83 indicates overall short-term trend is down here. Of course, you're welcome. Always my pleasure there, Nectarios. NVVE. NVVE. Poor long-term potential. A lot of risk associated with it. Even with the 5% update here today, it's still in a short-term decline. Overall, stock is not favorable. Make sure I get all of them. CWH. We'll finish off with this one here for today. So CWH, good long-term potential, but does have more risk associated with it. On a short-term basis, you are in a slight uptrend, but really not above that level, that personal level of 1.1. So I'd be a little careful with that one. VST, overall stock is favorable. Taking a look at the chart, once again, we'll go to the graph settings here at the bottom. Change the lower graph to the MACD. Let's go 6 months. Interestingly enough, you're starting to see a bullish divergence with this one. So price has been steadily moving lower. MACD has been steadily increasing here over the course of the last 4 months or so. So one maybe to keep on your radar here. All right, now I know I said that was gonna be the last one, but you guys got two more here. So I want to make sure I get everybody's stocks analyzed for you guys. So let's go ahead and do these last two, and that's gonna be it. Promise. And if you guys like seeing your stocks analyzed, don't forget, make sure to smash that like button, share this out with all your friends and family. Tell them, about what we do, and tell them, if you want to learn how to invest in a smart, proven way, make sure to come hang out with us on every Thursday there. All right, so MOS, good long-term potential, but does have a little bit more risk associated with it. You are in a steady decline. Overall stock is favorable, but you need to see that timing pick back up for an entry there. And then TGT, good long-term potential, less risk associated with it. However, timing is everything once you own the stock. At 0.54, it is in a strong short-term decline. Overall, the stock is a little bit above average, but the timing is the one key factor that tells you to be careful. Josh, if you want to see JP Morgan or any other of the big four banks analyzed, go check out the latest video I did on Monday, where I analyzed the four major banks and broke down which one would be best for different styles of investors, and really get into a lot more detail on the banks. So I would highly recommend go check that out after today's stream. Also, if you're new here and, I know we covered a lot. If you're new here and feel like, you're just drinking from a fire hose, I do apologize, but at the same time, always remember, you can always go back and review any of our live streams after they are live on both our Facebook and our YouTube channel. So that way, if you want to rewatch it, maybe catch new tips or tricks every time you rewatch it, you can always go back and rewatch the replays. Man, that's a tongue twister. Rewatch the replays after our sessions end. So never forget that there as well. All right, so let's go back into the overview page. Taking a look at the overall market, we are still one tick into the green. Therefore, the market is mildly bullish, and VectorVest still advocates caution, though, when buying stocks at this time. If we scroll down, we can see we still have that green light in the price column. The RT's picking up a little bit from where we last looked off, if I recall correctly. Same with the buy to sell ratio, same with the MTI. Looking at the advanced declines, about same as what we were looking at previously, where we have about 75% of stocks moving higher and about 15% of stocks moving lower. So about a 1 to 5 rate, or 5 to 1 ratio of stocks moving higher than moving lower. So therefore, if you did get into a stock today, probability is on your side that that stock is making you money right now. As we scroll down, take a look at the major indices. The Dow is now up a full 1.5%. NASDAQ up over 2% now. S&P 500 up about 1.7%. VectorVest Composite up 1.6%. So we see they did take that little bit of a breather and now starting to continue their climb higher here. So that's going to do it for today. I do want to make mention that if you guys are regular Trending Thursday viewers, that Glenn is out today, so there will be no Trending Thursday today. So I do apologize for that. But on that note, we do have a long weekend, so I hope everybody has a great long weekend. Enjoy the time with your friends and family. Be safe out there. Be smart out there. Don't do anything I wouldn't do, which isn't much, but, it's better than nothing. And make sure to be here next week as we kick off our next mobile coaching stream on Thursday at 11 a.m. Eastern. So until then, take care, adios, and toodles.